I'm Alan Kenny, and we're at the Hay Adams Hotel in Washington, D.C. for NAREIT's 2017 Washington Leadership Forum. I'm joined by David Neithercut, President and CEO of Equity Residential. David, you're in your 11th year now as CEO of Equity Residential. I want to know, what's been the biggest change in the apartment business in that time?
Can't believe it's been 11 years. It's interesting. I sort of break that down into three different kind of categories. In some respects, the basic box that we rent really hasn't changed all that much. Maybe it's a little smaller. Maybe the ceiling's a little higher, a little bit more granite. But really, the basic sort of box hasn't changed all that much. The way we run our properties has changed considerably with the use of technology. We operate revenue management systems today. Our prospective residents are able to see our units online, see the view out the window online, lease the unit online, renew their lease online, put their service requests in online, pay their rent online. I mean, it's really something we don't often have a lot of engagement directly, face to face with our residents. So the way we basically run our business on a day-to-day basis has changed considerably through the use of technology.
And Equity Residential sold off about 30,000 apartment units last year. Now that the dust has kind of settled on all those deals, how did everything work out?
So we sold $6.8 billion of real estate last year in an effort to get out of exit markets we had designated as exit markets, and to sell assets that we knew we did not want to own long term. There was a lot of private equity had been raised, a lot of debt was still available, and we thought it was a unique opportunity to take advantage of a lot of capital looking for multifamily assets. For Equity Residential, it was a great strategic move for us. We're now focused on our core markets on the coasts, and I think the timing was very good for us. I think most anyone other than the seller would tell you that we got a very good price, and a price we might not be able to replicate today.
More deals then on the horizon this year?
No, we will not be as active this year as we were last year, obviously, with $6.8 billion and an $11 per share special dividend with those proceeds. We will continue to transact as we find opportunities to redeploy or recycle capital from lower long-term return assets into higher assets in our individual markets, but it'll be more of just of a trading mentality. If we can find an asset we want to buy and it makes sense to do so with capital raised through an asset we want to sell, we'll go ahead and transact. But it'll be nothing like what you saw us do in 2016.
Thanks so much for your time, David.
My pleasure. Thanks for having me.
For more on this and other REIT news and analysis, be sure to visit REIT.com.